Hey everybody, what's going on? Welcome to your weekend briefing for the week starting July 31st. In today's show, we're going to look at earnings with 1/3 of the S&P 500 companies reporting this week. We've got a lot of jobs data coming this week, so we'll take a look at that. We've had a great week, but it got a little scary on Thursday, didn't it? Friday proved, though, just how resilient this market is. So we'll take a little look back at the charts of the week. And we'll be looking at lots of charts to take a look forward and help us figure out what might happen next. I think we've got a really important week coming, and there's a lot to talk about today. There's a lot going on in these charts. So we'll try and get through it as quick as possible, but I apologize now if we end up going a little long. I think it'll be worth it, though, and we also have some nice setups to look at later on. So let's get right into this, but first, why don't you go ahead and smash that like button if you like what we do. We put a lot of work in these videos, and it really helps us out. And if you're interested in who I am, my name is Kevin D in the Discord. I'm a full-time trader with 25 years of experience, a CMT Level 2 candidate, a mentor of the investor community since 2020. Okay. We do these videos every week to help keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take part in our live streams, our live mentoring sessions, and have exclusive access to these weekly market briefing videos. So if this all interests you, check us out down in the link below in the description and come join us on Discord. We'd love to have you there. Got a quick little disclaimer for you. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading and investment decisions are your own and done at your own risk. Let's dig right into this, starting with earnings. On Monday, before the open, we have SoFi. That's the only one out of this long list on Monday that really interests me. And I think that a lot of traders will be interested in SoFi. Monday after the close, Budget is another one that interests traders. I'm not sure if it interests anybody else. On Tuesday before the open, Norwegian Cruise Lines. That will be very interesting. I think there'll be a lot of eyes on that one. There will definitely be eyes on Uber. And I think that there'll be eyes on Caterpillar because, the industrials are one of the strongest sectors right now. Industrials are out at all-time highs. And Caterpillar is one of the biggest holdings in the industrials ETF. So I think that a lot of people will be watching what's going on here. I think the reaction to this will be very interesting. We have some second-tier names. We've got Pfizer and Merck. I mean, there's definitely important companies, but maybe not as important with traders. On Tuesday after the close, AMD, obviously a big name. Devon Energy has done well lately, and it's in that energy sector, which has been making a move. Starbucks is always interesting. And Pinterest, another one that interests traders. And we have some other names like MicroStrategy, SolarEdge, ELF that may interest traders as well. On Wednesday, before the open, we have CVS. Generac, I know is going to be interesting to a lot of people, but man, this is a tough stock to trade. I have tried to trade this before, and it makes really unusual moves, and I think that's because it is so weather dependent, especially during hurricane season. So this one for me is on my do not trade list. But I highlighted it because I know a lot of people are interested in it. I just don't think that, certainly newer traders should not trade this. I think this should be left to the most experienced traders. A couple down here, Cameco, a second-tier name, but that could be interesting if you're into uranium plays. That's the big name in that space. And Builders First Source, if you're into home builders and whatnot, I think that could be an interesting name. PayPal, after the close on Wednesday. Shopify, Qualcomm, Oxy, all big names, all closely watched by traders, and also Robinhood. If you're into Latin American stocks, and Mercado Libre is going to be one that you're watching, and maybe you watch Etsy as well. InBev on Thursday before the open. This is where Budweiser is, and you know that Budweiser has done a big shake-up in their C-suite. So I suspect they're going to be an earnings miss. But who knows for sure. Why would they do a big shakeup right before earnings if things were going well there? Moderna is one that should be very interesting on Thursday before the open. Wayfair will be interesting. This is one of the stocks that we've been watching for a play. So let's remember that we've got these earnings coming up on Thursday before the open. And Expedia, I think, will be interesting because, the cruise lines have been doing really well. The airlines have been doing well for the most part. So has Expedia also done well? After the close on Thursday, we've got two of the biggest names we could possibly have, and that would be Amazon and Apple. Does this set the tone for the rest of the summer? I think if there's anything shocking going on here, it may very well set the tone for the rest of summer. If they come in line or even beat, that could be very, very interesting as well. We've also got Coinbase on Thursday after the close. We've got Square. Sorry, I can't call it Block. We have Square after the close on Thursday. Airbnb will also be interesting. And some second-tier names like DraftKings, Cloudflare will also be closely watched. On Friday before the open, we have Fubo. No, I don't think Nikola is important. I think Nikola is a joke. Enbridge may be important as a second-tier name. Same with Magna if you're into cars or the automotive industry. And Dominion Energy, if you're into the energy sector. All right, that's enough earnings. Let's take a look at our economic reports that we've got coming up this week. Chicago PMI on Monday. Not particularly important. Probably won't move markets much unless it's a really big surprise. On Tuesday, ISM Manufacturing PMI. PMI stands for Purchasing Managers Index, and that is important. This does have potential to move markets. And also the JOLTS job openings on Tuesday. This is our first look at jobs in a week that's really all about jobs. So that is potentially market moving as well on Tuesday. Wednesday, we have the ADP non-farm employment change. Now this number, this number absolutely moves markets. It did a lot last time. The funny thing about this number is it's always wrong. It is and a lot of the time it is wildly incorrect. It is just so far off base, and yet it continues to move markets. So normally, if a number is going to be wrong all the time, I wouldn't watch it. But because the market does watch it, the market reacts to it, even though it's wrong, you got to watch it. Thursday, big day on Thursday. We have an OPEC meeting, and so at some point during the day, we probably get some confirmation of, do they hold production levels where they are? Do they raise production? Do they cut production? What's going on there? We'll probably hear about that on Thursday. Occasionally, rarely, meetings run into 2 or 3 or even 3 days. So if we don't hear anything Thursday, we probably would on Friday. But that can have a major effect on, the price of oil and energy markets. We've got some energy plays that we're going to be looking at a little later. So it could have an effect on those, and we probably want to hold off on any energy plays until after we get this information from OPEC. Also on Thursday, we have the ISM Services PMI, another important number. And we have unemployment claims, as we always do on Thursdays. Now, on Friday, we have non-farm payrolls. This is always really important. This is closely watched, and this is the number that is generally considered accurate. And the market does watch this closely, and the market absolutely reacts to this. This is also the number that the Fed pays attention to. The Fed does not pay attention to the ADP non-farm employment change, as far as I know. They are much more interested in this official data, the non-farm payrolls report. And interesting thing about the Fed, now they are on summer break now. We won't see the Fed or the FOMC again for a rate hike meeting until later in September. Because of this longer break now, what we've got is we have basically between the last meeting last week and the next meeting is almost 2 months. And there is time then for 2 of all of these reports. 2 PCE reports, 2 CPI reports, 2 non-farm payroll reports. So I kind of wonder how much this first set of reports are actually going to move markets. How important are they to the markets when we've got a whole other set of reports that are coming much closer to the next FOMC meeting? So it'll be interesting to see how this plays out. It could be a non-event. All right, let's move on to our short-term market regime tracker. You can see that last week we were at 5, and our uptrend is starting to diminish slightly. We're getting into we're right in the middle of the choppy zone now. Nothing to worry about though, in my opinion, and you'll see why when we look at some charts. We're going to look at charts right now. We'll start with the major indices, international markets, important commodities. We'll look at the major sectors. Any of the setups we've been watching over the last week or two, and we've got some good new setups for you to take a look at towards the end of the show today. Oops, that's not where I meant to go. Let's take a look at our charts. We'll start here with a weekly chart of the S&P 500. We don't always look at the weekly, but I wanted to get a little bit of context before we went into the daily chart, just because Thursday was weird. Now, when we take a bigger view of this, we can see that this looks great. Last week, or week before last, we had a potential reversal candle here. You can see that big selling wick on there. And I say potential, big emphasis on potential reversal. That did not come to pass, obviously, and we had a good week this week. Closed just ever so slightly above the high of the previous week. Nothing wrong there, right? Let's look at the Qs. Please. There we go. Same kind of idea. We had a more serious looking reversal candle on the week before, but we engulfed that, or almost engulfed that, with a bullish candle this week. And put in a new closing high in this trend, this uptrend this week. Again, nothing wrong with this. Now, moving over to the IWM. As we know, the IWM has been underperforming until very recently, but coming into some resistance here. And again, in my opinion, nothing to worry about. I want to take a look. I'll take a closer look at all of this on the daily chart, because I have been hearing people calling this a triple top, and it is not a triple top, and I'll explain why shortly. Let's go over to our dailies, and we're going to start with the we'll start with the SPY. Because I want to zoom in a little bit on Thursday's action for obvious reasons, and Friday's action. All right, clearly we're in an uptrend. Nasty, very bearish engulfing candle that we had here on Friday. One would have expected to see us come back even farther and have probably another one of those nasty looking candles on Friday. We did not. Now, if you remember from last week's video, I talked about how we're getting a little stretch away from moving averages here. It's, we're coming into the depths of summer when things are usually slower, when volume dries up and we see increasing volatility. Maybe we saw some of that increasing volatility on Thursday. But I talked about how I wouldn't have been surprised if we had pulled back down into this area and consolidated even to the end of August, or perhaps even into September, before we sort of moved out of that. I still wouldn't be terribly surprised to see that, but this candle on Friday, this reversal off of that nasty looking candle, is a little surprising and very bullish. What we've seen here is the bears totally took control on Thursday. And then what did they do? They gave it up. They could not follow through to the downside, and the bulls took it right back. So this really looks like it's going to be going higher. It kind of has to go higher now. If the bulls don't do a little bit of continuation here on Monday, then yeah, they could be in trouble. We could see there is still the potential for a rollover and continue down and actually move into a bit of a correction here. That potential is still there, but much lower probability of that happening now than happening after Thursday, where it looked like a high probability. So that's good to see if you're bullish. Must be really frustrating to look at that, though, for the bears. It must be incredibly frustrating because they had a good chance and they gave it up. Again, you can see here. Look at the Qs, right? Even though it couldn't make a higher high here, some people would call this a double top. It is not. The Qs, all of the price action from the day was in the top third of that very bearish engulfing candle from the day before. All right, let's move on to IWM. Okay, we need to back up a little bit here because I want to look at this resistance zone. I want to explain why people are calling this a triple top, even though it's not. All right, you can see we've got this resistance. Goes back to this consolidation back here in April of last year. And we fell apart down out of there. We came back up into that level, immediately reversed. Right, it spent a couple of days up in that zone, and then reversed hard. Now it was unable really to. I mean, technically it did put in a lower low, but just barely on there. Came back up, couldn't put in a higher high, so put in a lower high there. Okay, still on a downtrend, right? We came down. We're unable to put in a lower low. Okay, this is interesting, right? And we went back up and we put in a higher high than this. And it's like, okay, is the uptrend starting now? No, it wasn't, because we failed to put in a higher high. We came back down in here. Technically, again, put in a lower low, but this is really all part of the same lows pattern, in my opinion. People are calling this a double bottom. It's not yet, because this is not a double bottom until we put in a higher high here. But again, we're putting in, we come up here, we have a little pullback, we move out of here. So this here is a higher low, and we move back up into this resistance level that people are now calling a triple top. This can't be a triple top until we put in a lower low that breaks down through these lows right here. We get that, then we can call this a triple top. But so far it's not. But what's important here, I think the most important parts of this price action is how you come up into resistance, immediately pull back. Come into resistance, immediately pull back. Come up into resistance, consolidate. You see the difference? Change of character here as we come up into here. We've consolidated nicely. We've got a bit of a bull flag. Now it got messy. We tried to break out of that and it failed. But where did it fail to? Came right down to the bottom of the bull flag and halted there, and then gapped up really nicely, and we're right at that breakout point of that bull flag again. Now what I'd like to see here, because this has been a little scary, and I think that if this does break out now, like Monday, I think it's going to run out of buyers fairly quick. What I'd like to see is a little bit of a slower move up, come right to this level, and let's consolidate in there for a few days, a week, or maybe even more. Nice and tight though, and then break out. I think that is a breakout that people would jump all over and buy, and could take us out to new levels. Definitely through the top of that resistance zone and up into this 208.60 area, where we've got probably major resistance, and that does seem a logical spot to stop and consolidate again. That's I think the most likely outcome on IWM here. Let's take a look at the volatility index. Interesting little piece of trivia with the volatility index here. August is one of the months that has the highest probability of closing higher at the end of the month than it opened at the beginning of the month. So what that's telling us is we generally see an increase of volatility in August. That makes perfect sense because volume goes down. When volume goes down, there's less liquidity. You have outside moves. So we should expect, even though things are basically slower in the market, we should expect days where there is high volatility for no apparent reason. Okay, now you can see we had that increase in volatility here on Thursday, and it gave it almost all of it back on Friday. That's not bearish. That's not bearish at all. That is quite bullish price action here in the volatility index. All right, let's take a look at the 10-year yield. And yields is one spot where, if you continue to be bearish, you can have some hope. Okay, so we see we have had rising yields into the FOMC meeting on Wednesday. The red candle is Wednesday, and you can see with Powell, kind of hitting the Goldilocks zone there in his press conference, those yields came down a little bit. Now on Thursday, yields shot right up, because what happened on Thursday, and I should have mentioned this earlier, but what happened is that the Bank of Japan said they were going to tweak their yield curve control and allow rates to go above 0.5%. Now, I think there was a massive overreaction in the U.S. equities market. I'll explain that in a sec, but in the bond market, it makes sense that yields in the U.S. would go up on that. That makes perfect sense to me. But in the equity market, why we sold off like that doesn't make sense. It was obviously an overreaction. The reason it sells off is because there's a lot of Japanese money in U.S. equities. And if their rates are going to go higher, then their own domestic market, their domestic bond market certainly becomes more attractive. And I guess the equity market fear was that a lot of the money that is in U.S. equities gets repatriated to Japan. And again, I think that going slightly above 0.5% is nowhere near attractive enough for investors to be pulling their money out of the U.S. and moving it back to Japan, in my opinion. And so that's why we saw such a big overreaction. But the bond market hasn't really pulled back much. We had a bit, we did recover quite a bit in the equities market, obviously, but not so much in the bond market. Yields are still a little high. So if you are bearish, still, you're looking at that with your fingers crossed. All right, let's take a look at the dollar index, because we see a similar sort of thing going on there. You can see that we had been moving up into the FOMC meeting, pulled back nicely as we should have on the meeting, but then Thursday shot up, and that again makes sense. The US dollar is a flight to safety currency, and is still hanging up in there. So we're still seeing some uncertainty in the currency market here. I expect that this will roll over again, come back down to this support level, and then we'll see where it goes from there. All right, let's take a look at our global ETFs, see what's going on in global markets. We're first looking at ACWX, and this is the all-world index less the United States. And you can see that this had a really good week, closed on highs for the week. Looking strong, looking good here. We've talked for quite a while how we want to take a more international approach with our investments, and this is why. EFA is Europe, developed Far East, and Australia. This had a pretty decent week, breaking out of this consolidation to new highs. It's unfortunate that it had to give some of it back on Thursday, and this is a little. I don't like this selling wick here on Friday, but we'll see. This thing on Thursday really kind of did mess with markets, and we should expect some shockwaves after that. All right, we're going to look at EMCX. This is emerging markets less China. Can I have EMCX, please? Thank you. This is emerging markets less China, and you can see that this had a strong week. And then when we look at China itself, we'll look at FXI. This is large cap in China, and this had an outstanding week. Look at this move. So we've been in this consolidation for ages now. And we basically went from one end of the consolidation to the next over the course of a week. A massive gap up here on Friday. And this is because, of stimulus and everything. The CCP, Chinese Communist Party, and their Politburo and everything, talking about stimulus. And it looks like this time, they've been talking about stimulus a lot, but it looks like this time they're really going to take action on it. So if they are successful in stimulating their economy, that's going to reverberate through a lot of areas. And one of those areas is commodities, which we're going to look at in one sec here. But it's also going to be reverberating through their stock market. That's the first place we're going to look to see if stimulus is coming and is it working. And so far, so good. Now, let's move into our commodities. We'll take a look at gold. This is nothing really interesting going on here. It's in this consolidation. Nothing really to report there. Silver's not terribly interesting either. It was maybe a little uglier on Thursday than gold was, but had a little bit of a bounce here. Yeah, I don't know. I mean, nothing to see there. Copper is the metal that I find really interesting. And I'm going to be showing you a play in copper later on. I think you can see, looking at this chart, why it might be interesting. And if you know anything about copper, you know that if China is doing well, copper is going to do well. So, like I said, if Chinese stimulus is going to work, copper is one of the places we want to be. And look at this. We had, you can really see the polarity of support resistance here. You know, resistance, support, come back, come down through, try and go back up, resistance. So obviously very strong, very important level here, and we're right back up in it again. However, coming up this time, we've been coming up into it, making a nice series of higher lows, and we're having a lot of touches in this area. We're consolidating up in this area to a degree. Now, what I'd really like to see happen is a consolidation, a nice tight consolidation right under this, and that would be my go signal to initiate some plays in copper. Probably not on the commodity itself, and I'll show you a stock that would be a really good play if we're going to go get a breakout out of this level, which I think we are going to get. Okay, let's take a look at crude oil. Crude oil is coming up into a major resistance zone. This one I don't think is going to go through right away. I think we need to see more consolidation in here. It's had a bit of consolidation. I think we could see a move higher into the zone itself, but then I think we need to consolidate a little more before this moves higher. Natural gas. This has had some nice patterns in it. It had this nice cup and handle pattern, and that has completely failed. This is why they call this thing the Widowmaker. I'm not going to play with this. Let's take a look at XLRE, or Energy Sector ETF. And you can see that this has recently made a nice move along with oil. Interesting looking hammer candle here on Friday. This is probably going to consolidate, maybe move up into its resistance zone a little higher if crude moves up towards its. OAH, the Oil Services ETF, this is where all the action has been in the energy space lately. You see this really strong move, all-time highs, consolidating, making a bull flag right now. Even though I'm not super bullish on oil, this is telling me that, maybe I'm wrong not to be bullish on oil. These are the services companies. The market is saying, hey, those companies are going to be doing really well. So I think we need to pay attention here. And I've got a play to show you in this space. All right, let's move on to TAN. This is a disappointment. The downtrend continues. It's maybe trying to bottom here. You can see we're putting in a series of lower highs, but it's not really going much lower now. So maybe we're trying to see a bottom, but I don't want to play in this space. It's so volatile and is in a downtrend still. So until this starts to behave a little better, it's hands off for me. All right, let's take a look at consumer discretionary. We're moving on to our major sectors now. This was one of the very strongly leading sectors over the last many months. Very well behaved. You can see it started to get a little toppy here. It even gave us a warning, I mean, look at this day back here. It gave us a warning by putting a selling wick on that doji. You could call that a gravestone doji. And the very next day it gaps down and goes down. where did it go down to? That 21-day moving average, which has been supporting this through its consolidation. Now, most people would call that a bear flag. I'm just calling that a consolidation while it takes a break before it goes higher. And you can see when it tried to on Thursday break down below that level, that didn't last long because it gapped right back up again. I think we see this move higher over the next number of days. Now, we do have that gap right there that could act as resistance. And of course, that high itself. I think we might need some more, because I think actually what happens is we probably move up in here, consolidate up in this area for a little bit, and then move higher. Because I think money is going to be moving into other sectors a little bit over the next little while. XLI Industrials. This is very near all-time highs. Very healthy looking in here. It's been consolidating a little bit. Sure looks like it wants to break out to new highs here, or more new highs. Financials. These have been looking pretty healthy. Have pulled back a little bit over the last couple of days. No big deal. Found support right where it should. I think we can expect to see the uptrend in this resume and go higher. KLRE, the regional banks. Pretty much the same story here. A nice move over the last month or so. Taking a couple days off, but no reason to think that this won't continue higher. XLV, healthcare. Okay, this is interesting here. We need to take a closer look at this chart. So we'll back up a ways here. You can see that we've been in this massive consolidation since, when did that start? April of 2021, so just over 2 years now. This has been consolidating. We have been unable to put in higher highs. However, we have been putting in higher lows now over the the short and intermediate term. Still haven't cracked a higher high though in the longer term, right? But it sure looks like we want to try because we've got the beginnings of an uptrend here. And as we come into what we would expect to see a bit of a resistance level, that pivot right there, we start forming a bull flag. And I like the look of this bull flag. Now, I haven't actually found any healthcare names just yet. I think this flag needs to mature a little more before it's ready to go. But it doesn't need to do what I think it should do. This may go sooner rather than later. But this is definitely a space we should keep an eye on. There could be some really good opportunities here. And I'm going to start looking through the healthcare space and see if I can find some nice setups. Like I said, I haven't really found any yet, but we're still kind of new in this, I think. And I think those setups will start to materialize. And when I do find them, I will definitely be posting them in the Discord. XBI is also looking kind of interesting here. Not as bullish looking as the healthcare sector itself. But I like the look at this as a potential double bottom, especially with that reversal candle on Friday. Now, I don't like how that reversal candle stopped right at those moving averages, but let's see what happens on Monday. Let's give this some time to recover from that massive. I mean, it had already been having a big move down over the previous week and a half. And then Thursday happened and gave us a cut right below the 200-day and 100-day moving average, but we took those back immediately. So that's good to see. This is bullish right here, this last candle, in my opinion. So I want to keep a close eye on the biotechs. XLRE REITs. Now this is a defensive sector. And you can see that it got ugly on this one, like it did on everything, because on Thursday they were selling everything. But it got ugly there, and it continued to be ugly on Friday. So what's interesting here, if you think that the market should have got defensive because of what's going on, and if everybody thinks there's going to be a correction, this is one of the areas that you would have seen maybe a little more recovery on Friday, and we didn't. You saw some continued selling, so that doesn't really back up the bears theory that we're due for a correction. Looking at staples, this gave us a little bit of an update. Recovered actually quite a bit on Friday. So that goes against my thesis that, hey, you know, I mean, all this had been going up anyway, and staples will often go up quite nicely. There's a lot of big stocks in here that people want to be in, and people were starting to feel a little more defensive anyway, so it shouldn't have surprised us that we saw some movement to the upside in this recently, because there was some talk of the entire market getting toppy, and this is one of the places people go, put their money in where they think it's going to be a little bit safer. And then utilities. This came down a lot on Thursday because this is an interest rate sensitive sector, so not surprising to see this come down. But you know, came down some more on Friday, which is a little surprising. I would have thought, you know, if people are bearish on the market, that might have been moving into utilities a little bit. They did not, though. All right, where are we going to next? Let's go to technology. So we're moving into some of the more risk-on sectors. All right, so I like to look at this. We've obviously been in a massive uptrend, and you know, to see this pause and consolidate here, pull back, put in a little bit of a bull flag, perfectly normal, very healthy. This to me is very healthy price action, especially look at it. I mean, we get down to the 21-day moving average on Wednesday, we bounce on that. We get the gap up, we get the move down on Thursday. Where does it come to? Right to the 21-day moving average, right at the bottom of that bull flag. And then we get the gap up. And now we're back up at the top of the bull flag. This looks ready to break out. You know, so, and you know, and this is a risk-on sector, one of the riskiest risk-on sectors. Looking ready to break out of a bull flag. How can you be bearish when you look at this chart? Communications. This is an even more bullish looking chart here. Okay, again, risk on sector comes up in our massive uptrend, consolidates. People are going, oh no, it's toppy, we have to have a correction. And I'm saying, no, we're just we're consolidating here. Let's go sideways. Let's let these moving averages catch up. Well, it started to, look at these moves. You know, some gappy moves here, obviously on earnings, right? But broke out to a new high here on Thursday. Of course, gave that back, but immediately recovered it on Friday. That's not bearish. That's a very bullish looking pattern right here. Aside from the nasty bearish candle. But all right, let's move on to semiconductors. Again, slower move up into highs. But we are basically at all-time highs in this ETF. This is not bearish. How can you be bearish when semiconductors are at all-time highs? This is looking ready to break out. You know, this went up when people are like, oh, maybe it's getting overdone. We come down, we consolidate for a few days, we break out of the consolidation, right back up at that all-time high. This looks ready to go. So we've got a play here that I want to look at. And that play is not NVIDIA, which may surprise some people. I think that, you know, NVIDIA, if NVIDIA would have a decent pullback, then I think that people would start jumping in it. But we have these minor little pullbacks, and then it goes back up again. I think NVIDIA is going higher, but I think it's going to do it very slowly. I think it's stretched. Valuations are stretched, and I think it's hard to justify valuations that are even higher than its current valuations, at least for now. You know, slower move up, yeah, sure, why not? But I think for a swing trader who's looking for, you know, a bigger, more sudden move, I don't think NVIDIA is the place to get it. Let's take a look at Meta. I've made an adjustment to the trend line on Meta here because I think this is a very important swing low right here. It has been confirmed and everything, so I've adjusted our trend line down onto that. But this uptrend is still very much intact. Looking closely here, we had the big gap up on earnings, and it gave half of it back, but then recovered again and put in a new high here on Friday. So Meta continues to be very healthy. And also in Meta, closed this old gap. I'm so surprised we got up and fully closed that thing this soon. I thought this is going to take 2 or 3 years to go and close that. but it did it in less than a year and a half. So kudos to Meta. Okay, let's take a look at Apple. Remember, we've got earnings in Apple on Thursday. I think it was Thursday after the close. So nothing to do here. I kind of be surprised to see this break out to new highs, even if the market is moving higher through the week, because we've got earnings. And it's just been in this massive uptrend. So yeah, like I said, for me, hands off until after earnings. And there, Amazon, same thing. You can't go in here, even if as strong as it looks right now. We've got these highs right here. I would be shocked if it went beyond that before earnings. Netflix. So I don't like the look of this. I mean, it is holding its support. It did recover really nicely on Friday. It's at the 50-day moving average. But I think that this needs to just take a break, consolidate down here, probably between here and these moving averages here. Go sideways for a bit, let some other stocks take over and have some fun. But I'm not super bearish on Netflix. I think that this probably does continue higher, but there's risk in here right now, and risk of it moving down to this trend line or even this 100-day moving average down here. Okay. Google, I do like. Google has kind of underperformed its peers over the last little bit, and I think that there's a good chance that Google outperforms for the next little bit. Does a little bit of catch up to some of those peers, and that would mean moving up into this sort of 143 zone, maybe even a little bit higher than that. But we've just had earnings that had the nice gap up on earnings. Gave a tiny bit of it back on Thursday, but retook all of that on Friday. So yeah, we're seeing some strength here out of Google, and I think that continues. Microsoft is one I do not like, similar to Netflix. They kind of have come down here on their earnings. It did, manage to find support at the 50-day moving average and down at this support line here. And but again, I think that sideways is probably best case scenario for a little bit on Microsoft. And then there's Tesla. You could, some people will call this a bear flag. I think there's so much support down below here with the gap, both the top and the bottom of the gap. Also this, support resistance level at about 253 that goes way back in time. You've got the 50-day moving average. So I think if there's any bearish move down out of here, I think it's very short-lived. All right, let's move on to some of the plays we've been looking at. LegalZoom is one that worked quite nicely. We talked about it when it did this consolidation a couple of weeks ago, and we thought, we said, hopefully this consolidates for a few more days. That would be really nice. It did not. It broke out fairly quickly out of there, and it's been doing pretty good ever since. I'm sure some of you would have taken some profit here on this gap down day that got kind of ugly. But if you're still in it, grinding higher. There is a little bit of resistance coming up overhead at 1550, but once it's through there, and it looks like you're looking at a move up and around 17 to 1750, and above 1750, I think you can look at a really big move. So if this continues to behave, this is something that you might want to continue to hang on to. And it might give us a chance to add, I think keep watching this. If we come up into the 1550 and just do another nice little consolidation, kind of like this one, that would certainly be an add to position on a breakout. Now remember, none of this is investment advice. We're just speculating on what might happen to these charts. All right, Wayfair. Now this one I liked, and I liked this. I liked this both ways. I like this long and short. I thought, okay, we've got a major resistance level here, and we're consolidating in the resistance level. So we should, after a consolidation like this, and this series of, let me zoom in here, and the series of higher lows that it was making in a very short term, we should expect a break to the upside. But I thought, you know what? I mean, what if it doesn't break to the upside? If it rolls over, it could probably have a fairly quick move to the downside. I did warn about this 21-day moving average here that could act as support. Now, we got to move to the downside. If you took the short here, kudos to you, congratulations. I mentioned how you have to be really nimble, partly because of this 21-day moving average, and you can see that it did bounce there. And we've moved right back up into this resistance zone. I think this is going higher. Whether it does it on Monday, I'm not so sure. It'd be nice to see a nice tight consolidation here for a few days and then go, but I don't know if you're going to get that. Now, the problem is, this has earnings coming up on, I think it's Thursday or Wednesday. So it's kind of like, well, you can't do anything with this now. If this did break out tomorrow, I mean, how do you play that? I mean, I guess you could play it for 1 or 2 days, but you got to be out of this before earnings. So that's not ideal. However, if it hung out down here and consolidated and then made the move after earnings, I would be all over that, because I think there could be a really strong move up and out of this massive consolidation. This is a massive stage 4 accumulation going on here probably, and we could see this could be a long-term hold. You could turn a quick little swing trade into a move that becomes a multi-month, maybe even years kind of hold in this. Right, let's look at 9. So this is one of the energy sector plays that we were looking at. I've kind of soured on this a little bit. I mean, it's not really misbehaving, but it is starting to put in some lower lows here, and I think we can find a better play in this space. It is oil services, so that is the hot sector, but yeah, it has failed to do much of anything when other stocks in this space have been doing something. So last one is CSWI Industrial. We wanted to look and see. So this has had a nice move, and we wanted to see what happened here because it was starting to consolidate for a few days at that all-time high. And we thought, if this consolidates a little longer, give me a pattern I can work off of here, and then I can buy a breakout. I never really got the pattern I wanted to see, but it did break out, and it looks like it's going to continue. So if you got into that, congratulations. It looks like you've got more upside in this, and it's making all-time highs, right? So there's no overhead. There's nobody up there who's wanting to sell when they break even. So this could continue to have a nice move, and it's in that industrial sector, which is also making all-time highs, and building products, home builders and all of that. Which again are making all-time highs. So yeah, this is a nice play if you're in it. All right, let's move on to some new setups. Let's look at Halliburton. This is in the oil services space. We have a nice bull flag forming here, right up at around some resistance. I like it. It's had a downtrend, but this is definitely a nice bottoming pattern here, and it's starting to put in higher highs and higher lows. We are in an uptrend in this now. Let's actually take a look at this on a 65-minute chart, because I want to show you something there, because this could has set up like what could be a really nice entry for you. Look how tight this consolidation is on the 65-minute chart. Intraday on Friday. I mean, this is this is a easy high risk high reward, low risk setup. You could buy the breakout of that consolidation, so that'd be a buy above 38.20. Your stop goes just below it. What's that gonna be? 37.98. I mean, we're talking about 25 cents a risk here on a move that could be quite dramatic potentially. Certainly, 25 cents a risk gets you starting to play for this move up to 39.75, 39.70. So you're buying in around 38.20, 39. So that's $1.50. That's a really nice risk reward setup on this thing. Now, this stock does not have a lot of volatility in it, so that's a bit of a downside on the play. But I still like the play, and I think I'll probably be taking that on Monday if it gives me, if it breaks out above this high. I'd even chase a small gap in that, and I rarely chase gaps. So that one's interesting. XHB, I don't usually do ETFs here for our setups, but I like this one. This one's quite interesting, and I looked at some of the home builders themselves, and I didn't see a setup that was as compelling as this ETF. So, the ETF is going to have a lower return than an individual stock, but, sometimes that's okay. I like the look of this. It's also going to have lower risk, right? So, this is pretty obvious. I don't need to explain this to you. But look at this. Look how tight this candle is. The risk reward on this setup now is beautiful because you're going to be buying the breakout and you're going to be putting your stop just below that. Or I will anyway. I don't, you put your stop wherever you feel is appropriate. Maybe you want a wider stop, and maybe you think this turns into a longer term play. Maybe you put your stop way down here. If you think you're going to be in this for months, that's probably where your stop goes, right? Or even below the 21-day moving average. But for me, I want instant gratification on this, and if it doesn't give me instant gratification, I want to be out quick. So I would have a nice tight stop on that. All right, let's look at the copper play that I was talking about. This one is Freeport-McMoRan, FCX. We've played this a few times before, successfully. Now, let's back out here, and you can see that this has been kind of like, in a way, like XLV, the healthcare ETF. This has been a long consolidation. There have been places in here that you certainly could have made some nice plays. But we've got to beware because, longer term, we are still in a bit of a downtrend, but we are trying to break that downtrend right now. Intermediate term, we're in an uptrend. And in the short term, we're in an uptrend. Okay, so all we got to do for this is just get out above these highs. And that's going to confirm to everybody that, yeah, okay, the uptrend is on. Now, remember what I was talking about copper and China. This is the play on copper. So, if we see China moving up, we will see copper moving up, and we will see this move up, and it'll break out of this bull flag that is right under this trend line. This is a beautiful setup, and it's a low-risk setup, too. Look how tight this is here. So, simple. I'm going to buy the breakout, and I'm going to put my stop below the consolidation. This is that easy. Okay, next one. Skechers. This is SKX. Now, you'll see why I want to play this. All right, let's go way back in time here. So, this is all-time on this. We are currently at an all-time high. You can see we first started to develop this resistance level here at around 55, way back in 2015. Came back to that level back in July, August of 2021, so 2 years ago. And pulled back from there, and now we move back up in here. Now, what I want to point out is the change of character this time. And if you've been paying any attention today when we were talking about IWM and a couple other stocks, you know exactly what I'm talking about. When we came up into this level before, we went up there, immediately pulled back. When we came back up in here 2 years ago, we came up there and immediately pulled back. There was virtually no tiny bit of consolidation, but you could see the really spiky up into there and pull back, spiky up, pull back, try and consolidate. No, can't do it. Look at this though, compared to this and the other time. There's no spike up in there and immediately pull way back. What we're doing is we went up in there, we've pulled back a tiny bit, and we're consolidating. We've got a really nice consolidation in there. and we moved back up in there. I don't like, and now this happened on earnings, and that's why you've got the gap and everything, and I really don't like how much it gapped up there and then moved really big. So we've lost a bunch of the move. Lost a bunch of the potential on this, and it makes it a little scary because are people really going to chase it up in there? You know, this is a new all-time high. There's no overhead in this. It could very well just run. I don't want to take that risk just yet. And I've marked in here what I'd like to see happen. I would like to see this go up a little more. It runs out of buyers, and that's what I think is going to happen. I think this is going to run out of buyers because people will be afraid to buy it up in here. It pulls back away, but it finds support right where it should and starts a move away from that. And on the move away from that, that's where I'm going to be a buyer. Because then I think that sets us up for a move that could just grind higher for months, years. I mean, who knows, right? I mean, it's going out to all-time highs. Who knows where the top of this is? We could use Fibonacci extensions and all of that, but let's not get ahead of ourselves here. Let's wait for a setup to get into this. Okay, last one. This is KLAC. This is semiconductors. So you can see that this is just in a massive, super long-term uptrend. It's had some consolidations and pullbacks along the way, but this stock loves moving up. It's had a nice uptrend. It consolidated for a couple of years. It's now breaking out of that consolidation and moving higher. Unfortunately, it did it with this megaphone pattern. And this megaphone pattern, you can see why they call it that, is generally considered bearish. Now, I think in this context, I don't know. I'm seeing continuation pattern here. I really do think this goes higher. I think that, you know, it's come down. It's tested the 50-day, you know, the 20-day moving average. Now the 50-day moving average. It's broken out to the upside in a week that saw trouble, and it didn't have much trouble. And we've got this break to the upside out of this. So now this is a pattern failure breakout. Okay, because we expect normally this to break out to the downside of this pattern, but it's moved to the upside, and from that you can get fast moves. It's a little scary to be chasing this right now, and maybe, you know, maybe I would prefer to look at something like we just looked at with Skechers, where we get, you know, we move up maybe a little bit more, then we pull back to the breakout area, or, you know, the top of this gap or something, and then we move higher from there. That'd be a much better entry for me, but I might miss this by waiting for that. Maybe you want to chase this. Not really my recommendation, though. The flip side of this trade is, because I'm looking at the other side of this too, okay, it's like, all right, what if this is a fake out breakout up here? We do have what should be a bearish pattern. We've broken out to the upside. What if we immediately start pulling back and pull back into here and start, you know, closing these gaps? Maybe you want to play the short side of that. Maybe there's a quick short side move available in there, because if this fails to break out, you know, everybody who bought in here, and you can see there's a fair bit of volume in there, right? A lot of those are going to jump right back out. There's going to be a lot of weak hands here. So we could get a quick move to the downside, and that might be worth playing to the short. So, one stock, two plays. You got a 2-for-1 on this one. All right, that's all the stocks I've got for you. Let's go back to our calendar, see what we've got coming up this week. And on Wednesday, we're doing Trader Roundtable. And we've already been talking about this one. We're going to do a deep dive on some really specific day trading setups. And we want to talk about, you know, specifically about day trading. And I've got some setups to show, and I know some other people have some setups to show as well. Should be a really interesting session. And then on the weekends, of course, we do these weekend videos every single weekend. And the following week after our trading roundtable, we do our ticker talk session, which we do every couple of weeks. So if you want to join us on these live sessions, come join us in the Discord. We would love to have you there, love to have you participate in our mentoring sessions, and the only way to see these sessions is by joining us in Discord. And the only way to see these weekend update videos is by joining us in the Discord. So, link down below in the description. Thank you everybody for watching, really appreciate it. If you've liked the show today, hit that like button, share with your friends, and subscribe. Enjoy the rest of your weekend and have an excellent week ahead.